Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and welcome back to our next week today, a show where we talk about everything we see in the markets this week and coming up into the next week. And thanks for joining us this week. I am back in town, working from home today, just doing our little return quarantine, but should be back in the office tomorrow. So thanks for everyone who were stuck with us while I was on the road. I know the few of the shows, the sound quality might have been a little bit different, but hopefully it worked out well. So let's jump into things today. As always, keep in mind, everything that we talk about on here is for information purposes only. Always do your own due diligence or reach out to a professional. Go to our portal, mikeonmoney.com. Happy to answer any of your questions, anything specific to your situation. Anything at all, and you can also find our other videos in library of information there if you're looking for more information. So with that, as always, we got to do the COVID update. Obviously, the Omicron virus is or variant rather, is the top news as far as COVID goes. There's been a lot of progress. Obviously, there's been a lot of new rules around travel in place, which has messed up a lot of people's plans, just as people were starting to feel comfortable about getting out there traveling again. We're seeing a lot of cancellations or second guessing of those trips, especially leading into the new year. Both here in Canada, but if you are looking into, say, European travel, of course, they've put in a lot of new stricter rules. So do double check any country you're looking to travel into. Also, any return to Canada. There are a lot of new rules in place. We are starting to see some more tests. As I mentioned in previous weeks, Omicron was really early stage as to what that variant means, how the vaccines are going to hold up against it, and just, really any real information on it. Obviously, it has spread around the world. A lot of these restrictions were put into place to try to stop it from getting into different countries. And as we saw with the Delta variant, by the time they've identified it, it had pretty much already arrived at most countries, Canada, the US, most European countries. In fact, there's some questioning around whether it even originated in South Africa. Just that's where it was first detected. It could have originated anywhere in the world. There is some hope. Some new vaccine testing coming out showing that it does provide some protection. Canada has a homegrown COVID-19 vaccine that is going up for its phase 3 clinical trials, and it's showing some good strength against the Omicron variants, which is great for Canada because, of course, if we can produce it ourselves, then we control the supply and rollout. Although I don't know if we need another brand of vaccine out there, but if this one works well with Omicron and it's available, that's great. We'll keep an eye on that. I think the biggest thing we've seen with the Omicron variant is just that need for a global effort of vaccination, because there are a lot of countries around the world that do not have the access to the vaccine that we have here in North America, or even in some parts of Europe. As we go into our booster shots, a lot of people out there getting their boosters. And will become eligible for the boosters in the next month or two. There's still a lot of places that can't even get their first vaccination. So just highlighting the need for that. Obviously, the governments are making constant changes to restrictions around travel from South Africa, but I think we're going to see that change over the next little while, as I mentioned, as we get more details as to the effectiveness of the vaccination, but also whether it even originated there. So with that, let's move into what's going on in the economy. U.S. trade for October is coming out. We're looking into the production and cost numbers for Q3. And when we say that, revised productivity and cost numbers, because what we're seeing out of a lot of the earnings is, while sales numbers might be up, revenue numbers might be higher. Of course, we are still seeing costs going up, cost of materials, cost of labor. The supply chain issue is still there, and also dealing with COVID, whether it be shipping costs or extra space and extra cleaning. All those costs are still there. And that's affecting profits for a lot of industries. We're also looking for the Canadian trade numbers for October as well, just to see how things have been balancing out and how much that supply chain is affecting things, because we will be seeing things being affected by the supply chain as goods are not moving as efficiently around the world as in previous economies. As far as what's happening in the markets, we're seeing the second day of some good, strong bounce back after we did see some pullbacks last week on the concerns around the Omicron variant out there. People are starting to ease up their concerns as far as shutdowns go, as more and more data comes out that, the earlier suspicions that Omicron definitely more contagious, but we are seeing, less, the symptoms are less harmful, less hospitalizations. It is a natural mutation for this type of virus to become more and more contagious, but less and less virulent as far as the impacts on us. So it may continue to mutate, and this might be how this whole pandemic ends, is as it continues to mutate, it just becomes, slowly becomes another version of the flu that we would just deal with in the population as we deal with the normal flu. So hopefully that's where we're headed. Of course, that's not going to happen overnight. Omicron is just one variant. There may be other variants. In fact, there's rumors now that there's a Canadian-born variant that's different from both Delta and Omicron, and we'll have to see what that looks like. But early comments is it's not as severe as those other two. Traders, as I mentioned, the markets are bouncing back. Traders are feeling a little bit better as Fauci made comments that the Omicron might be less dangerous than the Delta variant. Also, some buoyancy coming from the sentiment that China's decision was to lower the reserve requirements for their banks, so easing up on some of the bank restrictions there. But do keep in mind, there's still, a real estate issue going on there. We've talked about Evergrande, their big real estate developer, who, got into basically close to Chapter 11 or bankruptcy protection, was bailed out a little bit by the government. They made some payments, but as of yesterday, they are defaulting on one of the biggest payments. So does that push them into bankruptcy, or is it going to be some kind of 11th hour package to restructure that again? So we have to keep a close eye on that, because the amount of debt that they're carrying and how that might affect their real estate market in China, could be very impactful. Especially some of the European banks have some bigger exposures to Evergrande, but certainly in China as well. Other things we have going on out there is the central bank's communication. So this is our ongoing inflation watch. What's happened with interest rates? What's happened with inflation? The financial markets are struggling a little bit because we have the central bankers out there from all different countries signaling possibly different timing for some of their unwinding of the liquidity that they put into the market. And in December, in a matter of a 24-hour space, we're going to see the Fed Reserve meet, the European Central Bank meet, and the Bank of England all holding crucial meetings to give direction to the market as to how they're going to handle their individual economies. And obviously, that's a lot of juggling of information and some key players in that global market. So look for a little bit of volatility around that for December as we try to get a clearer picture of what 2022 looks like. The oil market was hit by a wave of hedge fund liquidity. So, we talked the last couple of weeks as the price of oil came down from 80 down to 60, I think 67. A little bit of that was some of the governments around the world releasing some of the governmental reserves to ease the price at the pumps a little bit. That didn't seem to last long here in British Columbia, but wasn't really expected to. Really, that was just easing a little bit of the supply chain. problems, but the bigger issue is, of course, that demand crunch. And unless we see, anything close to the shutdown drop in demands, we're probably going to see a continued surge in demand for oil, especially if travel does continue to pick up the way it has. Now, we did see that pullback. A lot of that was concerns on the Omicron virus, causing another shutdown. Of course, the hedge funds who got hurt really badly in the last shutdown, because they make big bets on energy sectors, started dumping some of their oil positions just to not get caught again. That's not necessarily a prediction. It's just more, hey, we don't want to get caught as bad as we did last time. We're going to dump that off. Now, that being said, oil has rallied back over the 70, almost to $72 again, as we've seen, demand staying high and more bullish positions going in there. We also saw, I think it was the Saudis raise the price a little bit on their oil production, giving a little bit more strength to the pricing around the world. Funds missing out on one-way U.S. yield curves. So, through all this inflation and interest rate speculation, there is this, bond trades out there that are happening quite a bit. As we've seen over the last few weeks, we've seen that 10-year curve starting to flatten down, pull back from, 1.8 down to about 1.4 on the 10-year. Everyone's betting on that flatter curve, but as we see in those December meetings, we might get different directions or different projections as to when those interest rates are going to move, or when the inflation number is going to have a big impact. And we could see some very aggressive trading that we've not seen in years as far as the fixed income market goes. Other things in the news, investors are breaking for potential hit on earnings from Omicron. And this is not necessarily a shutdown, but companies and retailers are going to be affected. Travel, as I mentioned, a lot of people are canceling travel or postponing travel again just because of the concerns. Not necessarily that we're going to go into shutdown, but people are we're all in that what if scenario, right? What happens if I travel to a country and I can't get back? What happens if I get there and the rules change? We're seeing that in the press a lot right now of people who might have gone to South Africa and are trying to return to Canada or any country really in the world, and they're having their negative tests before they get on their planes, but there's restrictions and they have to jump through different countries, pay a lot more for the airfares, or even not even able to get flights because a lot of them have just been canceled straight out. So there's all those things happening. Restaurants, of course. As more and more people become concerned, people stop going out as much, and retailers the same thing. So, this Q4, as we get more and more information on Omicron, we're going to have to keep a close eye on, especially, those industries that were really hard hit during the original shutdown, how people react. And those hedge funds selling off oil is a good example, because some people got hurt really badly. What happens this time, even if we don't go into shutdown? Remember, this is just based on the concerns. We're seeing more M&A and IPOs. Genesis, which is an enterprise software maker, which is largely funded by Salesforce or Salesforce Ventures, a division of Salesforce. They've just raised some more capital, about 580 million. Put in their valuation about 21 billion for their IPO. Keep in mind, though, in 2020 was a great year for IPOs, especially in the tech sector. But keep in mind, in 2021, I saw a stat. I don't have the list. If you're interested, email me or give me a call. I'll try to pull it up. But the tech particular IPOs in 2021, I think there's only one or two that are actually in the positive from their IPO price. So it has been a little tight, but Genesis is currently roughly valued around 21 billion, and they're looking to go public using that valuation as a benchmark. Google and Meta, or Facebook as you might know it, are really prospering here on this digital global advertising growth. Obviously, one big move of the pandemic, when the first shutdown happened, one of the easiest budget line items for companies to cross out is advertising or marketing. And that's what we saw pretty much globally. People just slashed that line for at least a couple of months while they started to, or companies did that while they started to figure out what was going to happen with their businesses or how they were going to be impacted during that shutdown. And as it started to return, obviously during the shutdown, everything went digital. Uh, Interactions like this went digital, our shopping went digital, so did all the advertising, or large amount of it. Kind of that print media or traditional advertising slowly coming back, but nowhere near the levels that it was before. But we are seeing a massive amount being spent on digital advertising, and of course Google and Meta / Facebook, reaping the rewards of that, and all expectations is that's going to continue into 2022. Hedge fund Synctive, sees potential bargain as volatility roils the market here. So if you've been following us, you've heard me say before, don't be afraid of volatility in your portfolio. Volatility just means opportunity. If you have good positions in your portfolio, or if there's good companies out there, and we see volatility in their price, or down pullbacks in their prices, that's just a great sale. Just as much as you want to go out and buy the Black Friday sale, or you want to go out and buy the Cyber Monday sales, that's what we want to do in the portfolios. And this is a hedge fund that came out in 2019. Really took advantage, or was able to take advantage of the pullbacks we saw at the early parts of the pandemic. And now they're seeing this as another opportunity. And that's really what you want to use your portfolio for, in the big run-ups, or the big, when the markets are hitting new highs and all that. As we've always said, never be afraid of taking a little bit of profit from solid positions. You don't have to get out of the positions, just take some profits from it. We call it trimming, and have that cash. And when you see a pullback in other names that you like, or other positions in your portfolio, buy back in. It's not market timing. It's simply a smart investing, and it brings down that volatility or beta in the portfolio, brings down your risk, and improves your performance over time. Andrew Horowitz, which is backed by Samsara, is targeting an $11.5 billion valuation. Another IPO going out there. This is a venture capital giant, taking advantage of the lofty markets, and going for an IPO, and hoping to get more cash to take advantage of the 2022 growth. So let's take a look what's coming up this week. As I mentioned, coming up in the US and Canada, we're looking at the trade deficit, or the trade numbers, likely to be narrowed a little bit. That supply chain is going to affect global trade. So not a big surprise that we're seeing that. We did see a big surge in September. Of course, still on the tails of the reopening of the economy, but all the data is basically telling us we're likely to see a bit of pullback, as we're seeing those shipping lines bottleneck. And the same goes for consumer credit data, because of course, if we're buying less, we're racking up less debt. The WHO, the World Health Organization Strategic Advisory Group of experts, is getting together to talk about, a closed door meeting to talk about, the need for booster shots. Now, you might think that's counterintuitive, given, the US and Canada and a lot of countries are out there giving the booster shots. But remember, the WHO is looking globally. Their whole goal is to figure out what's the best way to deal with this from a global perspective. So for them, the booster shot may not be the big priority. The bigger priority may be to get those supplies into the hands of countries or in populations where the shots are not available. Now, I'm not talking about the US, where you have populations who don't want to take the vaccine, but more so countries that, as we've seen in South Africa, even Mexico here in North America, is not widely available. It is slowly getting there, but it's not widely available. So the WHO has been and is always going to be focused on, what's the global priority of getting the vaccinations. And very likely, while they might see the science and the benefit around the booster shots, they would probably rather see those go to to people who haven't even got their first shots or second shots yet, before we start to give boosters to the rest of the world. And we're also seeing the Bank of America CEO is going to be speaking at an investor conference, held by Goldman Sachs. Really, again, the theme around this is inflation watch. What's going to happen with interest rates in 2022? Other top news out there, the SEC's probing Tesla. It seems like they're probing Tesla every second day. This is around a whistleblower's claim on the solar panel defects. So if you're not aware, Tesla, of course, they make the cars, but they also make solar panels and solar roofs. The solar panels, they sell a certain solar panel kit to charge your car, but also to create energy in certain jurisdictions you can sell back to the grid or use to power your own home. And they also do the roofs, so you can replace your shingles with basically solar panels. They're solar shingles that you can power your house with, or, as I said, in some jurisdictions, sell that power back to the grid again. So there was some complaints of defects that were causing potential fires. Obviously, Tesla was dealing with it, but they were dealing with it quietly as opposed to doing a broad recall on the product. And so the SEC is probing into whether they gave false information to shareholders. Also on the electric vehicle market, the EV maker Lucid, who took advantage, or in the middle of taking advantage, of a $24 billion IPO through a blank check deal, or SPAC, reverse shell takeover deal. The SEC's subpoenaed documentation there to look into, did they follow the book? Did they, were there any inappropriate deals made during that merger? These SPAC shell deals we've talked about. We have a whole video as to what a SPAC is, special acquisition purpose company, and how they work. If you're interested in that, go look at it. They became really popular, obviously, in 2020 and early 2021. Continue to see a market for those, but there is some concerns around those structures. Global oil CEOs are stressing the need for fossil fuels despite their focus on cleaner energy. Again, we've talked about this. A lot of the big oil companies have shifted their future growth towards cleaner energy. But what they're seeing is what we've been talking about, is that demand for oil surging. And as they've turned off taps on some projects, or not started new projects in the fossil fuel market, there's that shortage, or the shortage of supply. So they're now starting to become aware, or they probably were aware, but hoping it wasn't going to be as big a problem, that we can't just turn off the taps until we have the new energy supplies or the new energy sources in place, especially while we're seeing boom in demand, or this resurgence of demand as we come out of this pandemic. Uber is in talks with its Mid-East unit, looking for outside investment. This comes on the tail end, actually, of Uber Technologies, suffering another blow. They just lost an appeal in Europe for their gig technology, or sorry, their gig contract workers, where they have to supply their or offer their workers more benefits like you would to a full-time employee. This has been going on for a while. California, they lost the case. They're appealing that. They lost the case in Europe. They lost the appeal on that. So obviously Uber is going to have to change their cost structure, or their offering structure to compensate. So how do they provide those benefits to their employees while still keeping their cost model? Obviously, that's going to be a big challenge. They kind of built it around not having to pay a lot of those benefits. But this is more broadly affecting, there's Uber, there's Lyft, but you also have, all your food deliveries out there. Obviously, Uber Eats, which is owned by Uber, but Skip the Dishes, DoorDash, all these gig worker kind of models can be swept up into this ruling. So that's going to be interesting to see how that plays out, how that's affected, and where we see that lead. As we talked about earlier, SPACs have been popular, and who more likely to take advantage of a iffy way to raise capital out there but Trump? And if you followed this, we did talk about it a few months ago. Trump went out and raised $1.25 billion through a SPAC to launch a new social media venture. Basically was saying he was going to take on Twitter, Netflix and I won't say Facebook, but this all-encompassing new social media platform that was going to dwarf all the other ones. And he raised $1.25 billion into that SPAC. It initially shot up in value. Of course, now they've missed some of the timing of their releases. So we've seen nothing launched really from this venture. We've seen no product. And to take on those platforms, from scratch, it would take probably a lot more than $1.25 billion. With that being said, we now see Wall Street regulators looking into that to see if there was any fraud or where it's at. Are they actually going to deliver on that promise? So we'll keep an eye on that news. I honestly, if you go see our videos, I'm not overly enamored with SPAC structures to begin with. There have been some successes that have come out of them, so they're not all bad. But this one in particular, obviously, I personally, my opinion would be to being a spectator will be a better seat than being a participant. On the exchange front, the euro and the US dollar, the euro to the US dollar stayed pretty flat as both currencies weakened a little bit as that safe haven demand eased off as early hospital data out of South Africa suggested that Omicron variant, is going to be less severe illness than the previous waves. So that eased off a little bit of that flight to safety into the dollars. It's funny, the euro roll is actually growing as far as funding currency limits, as a global dollar through the pandemic. The US dollar has always dominated that and will continue, but we are seeing the euro's role being a little bit bigger than in the past. And on that bond front, we talked about the 10-year treasury, which is kind of our benchmark to rates and inflation. And the Morgan Stanley is estimating by December 2022, so the end of next year, that it could rise as high as 2.1%. As I mentioned, it's been floating. Definitely the highest that we've seen so far is around the 1.8. It's pulled back last week as low as 1.4. And I've always kind of put the 1.85 as the tipping point where we're going to be at higher risk of those interest rate hikes coming into play. We've seen a bit of a pullback on that flattening of that curve. But Morgan Stanley and others are kind of moving that number to higher interest rates, likely the end of 2022. The original goal was early 2023, but that really could be a stretch if we do see those numbers in late 2022. So with that, as I mentioned, commodity prices, we saw the big jump as we saw some Iranian. Oh, sorry, I said Saudi, but it was Iranian oil. Seemed to raise the prices a little bit, 2% rebound there, and a 5% on Monday. So we're seeing a lot of strength coming back into that price of oil based on the demand. As I mentioned, follow the travel numbers. If travel numbers continue to rise, we are going to see continued increase in demand. If we do see a big, massive pullback on travel again, that would be the only kind of flag for me to say that we're not going to continue to see strength in oil prices. Gold did gain some ground just on again the concerns around Omicron, but also on the weakening dollar and again on just those projections on inflationary numbers. So with that, that's what I have. If you have any questions for us, go to mikeonmoney.com. Again, I always love the comments that you guys send in. Go there, visit, reach out to us if on any topics that you want to see. This will be our last show till the January. I'm going to take a little break over the holidays, give you guys a break to not have to tune in every Tuesday, but do look for some specials we're going to put out. We still have our year-end tax planning video coming out. And also we're going to do a deep dive into what is the metaverse. And I'm not talking solely Facebook, which is called Meta, but what is the metaverse, what that means for the future of technology, but also what it means for investment purposes and whether you want to have it in your portfolio. And if you do, how do you get access to that? So with that, I'll let you go enjoy your day. Thank you, everyone, and I'll talk to you soon. Bye now.